Hi everyone. It was a great week, right? The trades which we discussed last week, they worked really well, and even I am surprised by the magnitude of the moves which we got. There was some really good economic tailwinds, macro tailwinds for that, but our technical charts give us the clue earlier, and we were well positioned to enter those trades. And it did work out, right? So I will just go through the trades. Then I will go through the plans for this week as well. The first one, which worked really well, was Ethereum. So I played this using the Ethereum ETHA ETF. There are leveraged ETFs, but I didn't go for that one. To manage my risk, I went through Ethereum ETHA, and it really worked well. So I was pointing to this consolidation area last week. Once this consolidation is taken out, we could see a potential upside moment of Ethereum, right, to this area, and from there possibly to this area as well. So yeah, that range was taken out with magnitude, force, and volume. I was positioned in the trade even before the magnitude, so I took the trade somewhere here. I didn't wait for that range to be broken out because seeing the tightness of this range, I enter somewhere here on this day. I did enter this trade on this on based on 75 minutes. Um, Let me go to that. Yeah. After this move up, so this candle will look very small to you now because of these candles which dwarf these candles, right? But on that particular day, this looked really bullish. You see, there was volume. It looked a strong bullish candle, um, real tightness to the left. So I did enter that um, candle, that trade, with a stop loss below this range because it was still in the range. It was not really broken out of the range. So I did enter that trade within the range with a stop loss. And amazing trade. I'm still in this trade. I have taken a profit. I think I took about one by third on this candle. Then now it's really extended. So I took one more one by third. I'm still holding the half of my initial position, which I until this particular moving average, the 10-week moving average or the 21-day moving average, either one of them. I mean, if it breaks and closes below, right? It looks like there is a good runway upward, so I'm intending to hold this one. I'm not holding a leverage one, so I can hold this for as long as I want to. There is no decay or anything like that, so why not? I will just hold it till it proves otherwise. If it starts closing below down the 21-day moving average, I might exit. But until then, I'm planning to hold this one, right? So let's see how far this one goes. We also discussed ARC genomics. So I entered ARC genomics somewhere here. So we discussed this one around this region. So I entered ARC in this particular region. I'm still holding it. I haven't even taken any positions out or anything like that. The entire field of biotechnology is working really well. There was news about um, a cancer vaccine by Moderna and things like that, and I think that sector is working really well. XLV is really working well. Um, this particular ETF, I'm still holding. I'm not looking to take off any of my positions until it starts closing below the 21 day, even 21 or 50. This is something really long term for me. I think this has potential to go upwards. So let me hold this one. I will hold this one up to these levels and probably up to the previous highs. That's my plan. And if it closes below 50-day moving average convincingly, then I will think about exiting that position. But until then, I'm planning to hold this one. Stop losses are already in break even, so I don't need to be worried about this coming back and hitting my stop loss. I don't care about this position anymore. Let it prove me that it's weakening, then I will get out on this one. Um, one trade. Silver is doing well. Silver and gold both are doing well. I mentioned I have entered the gold trade and I exited that prematurely. I wanted to maintain my equity curve, so I did and exited gold earlier, but it's still going up. I mean, uh, it was stupid for me to exit, but it's planned, right? It's fine. I did get multiples of my R, and I am out of that trade. It's still going up. I mentioned about silver as another play because it was consolidating around this region, above this key moving averages, above this 50-day moving averages. I did take two trades. So one trade, my first initial trade, I was stopped out. So look, I did enter somewhere here when this was gapping up on this day when the silver was gapping up. This day, I think somewhere around this, probably this candle, right? It looks like to me it was breaking out. I placed a stop loss somewhere here, and I tried to enter. I was looking for a long. It did stopped me out, and it happens. Um, but then the next day, this happened, right? The ETF started coming back with volume, with power on this day. I ended back. I ended back with my stop loss below this region, and it's working well. So that's it. I have taken my partials. We'll see how this plays out, and I will be quick to exit. I don't want to hold this for long. I might exit based on the price action, but I think it looks promising as well. So some of my positions I do keep to run. Some of them I exit to keep my equity curve smooth. I'm not looking for home runs every time. I'm not looking for triple digit returns, that kind of a thing. What I want is a smooth return, smooth equity curve on my trading. Um, I'm looking for 20% return in a year, 20-25% in a year, nothing more than that. So I'm not taking extra risk whenever there is profit. I'm taking profit out off the table, balance my equity curve, um, and become stress free as fast as possible, right? I was wrong about this one, the China ETF. I did got stopped out. I was trying to enter China's kebab, right? I think somewhere around here or here. I think yeah, here or here. Yeah, when in this particular region, I was getting a small consolidation. I thought I could enter a position with a small stop loss below this region. I was thinking it might just go up from here. It got stopped out, and that's fine. I will wait for it to now properly set up and get above these key moving averages with some traction, with some volume. Then I will try to enter this one again. I'm not thinking it's going down again, but let's see. I don't know. So I will let price show me what's the next step, right? Then I will enter on this one. The two um the two tickers I'm tracking for next week is basically IWM and triple Q. I'm not convinced that much about triple Qs. I might not play QQQ or TQQ for that matter next week. But IWM, it looks good to me. It's about the VWAP. It's about the moving average getting starting to look feel like it's starting to get some consolidation, right? If it starts to move above the VWAP, it starts to move above the key moving averages on a lower time frame, like 75 minutes, I might attempt a long, but I want my stop loss to be here, right? So if it moves above with volume up here, I won't immediately enter. I want my stop loss to be below this swing low. So if I get some consolidation here, tightness and a move up, so that I can place my stop loss not too far away, then I will attempt that. Same goes for QQQ. As of now, I'm not finding it that much of an interesting play, but definitely if it tighten ups, gives me an option to put my stop loss. Maybe if it undercuts here and rally, then that's a good chance for me. I think that should be a good play. If it comes down, undercut, and moves up with volume, probably that will takes out some weak hands and some stop losses, and that's where I think it should get really interesting. So in any case, I want a stop loss to be below the signal. If it moves up here with volume, then it needs to come back, and I need to put my stop loss here. But my desired play is an undercut and a rally, and then I can put my stop loss below that undercut area and look for a move up. That's the plan for coming week. Not something I'm really excited about. TNA, I might play basically the small cap index. QQQ, I might play as well. But it depends on how good the price actions are next week. But otherwise, my other positions are working well. I don't need to take an extra risk to bring profit to the table. Um, Ethereum trade, my ARK trade, silver, those are working well. Um, those are working well. So I don't need to take an additional extra risk to bring more money to the table. So let it play out, um, and let me try to hold my current trades for some time, and that's it basically. I mean, if you start watching the videos and start to decipher how I trade, I think it will get really easy. ETF trading is really easy because you don't need to scan for the entire market. You don't really need to worry too much about earnings of one particular trade and gap downs and things like that. Obviously, you won't be able to make a lot of money trading equities, direct equities as well, right? You're not going to get 200% move in a day like Moderna, but but that can happen to the downside as well. So things like that. What I believe in is long-term compounding of my account. Get rich slowly, not get rich fast. So, like Warren Buffett, I think mentioned in one of his interviews, right? This is a long-term game, but I am playing it from a short-term trade perspective. But the objective is to get rich longer, not to get rich faster and shorter. Um, I take very little risk on my capital. I I hold my core holdings like the QQQ or S&P 500. That's for the long term. That's for my retirement goals, things like that. I'm trying to take small risk, 0.15 percentage per trade, 0.25 percentage per trade, nothing beyond 0.25 percentage. So usually I'm taking 0.15, zero point 0.2, that kind of risk, and trying to bring some cash flow to my account. And this is really helping me. And this is really stress free, risk free than trying to write options and things like that, right? Trying to sell options because you don't know about the downside risk protection. This I'm very much sure about my downside risk protection. When I imagine if I have a $100,000 account, I need to have some seven losers in a row to just lose 1% of my account, right? Um, Obviously, my um upsides are also not that going to be great. But if I can make some 10% out of this leveraged ETF trading per annum, and if I can get another 10% from my core holdings, uh, that's a really good return of 20% compounded annual return per annum. And I will be really happy if I can do that over the coming years. Um, that's the objective of my ETF trading, not to get rich faster, to get rich really slow, and this is stress free for me, right? um, that's it basically. Yeah, thanks everyone.